This is spiraling out of control. I'm your host, Steve Van Metre, and thanks for joining me today. In this past week, we've talked about how global trade is collapsing, how freight rates are collapsing, and now we're going to add another one to that list, which is used car prices are collapsing. And I know you're saying, but Steve, wait a minute, that's actually a good thing. There's lots of people out there that need a car, and if used car prices are coming down, then it means they have an opportunity to get one. But what we're missing here is this is a sign of a much deeper and bigger problem in our financial system and the economy. Collapsing car prices is actually a really bad sign, to the extent now there's one company that's threatening to collapse the entire market even further. And when you understand how our financial system works, one company should never have that much power because the system should be strong enough to absorb anybody from failing. But we're at a point now where that's not the likely case. So in today's show, we're going to take a look at what's going on in the used car market, who this big company is that's threatening to topple it even more, and what is going to be something that's going to get even worse, as this thing is likely to only spiral out of control even more. Let's go over to Bloomberg, where we picked today's story up with the headline, used car prices extend free fall as rising supply hurts dealers. The widely watched Manheim Used Vehicle Value Index last month was down a whopping 14.2% from a year ago, while unadjusted used car prices tumbled 12.4% in that span. Now again, I want to talk about what these numbers mean. You're not just seeing disinflation. Again, we talk about on a year-over-year basis. This is from this time a year ago. Now you're seeing deflation in the used car market. And this is something I think we're going to see in other aspects of the economy, but many people said this couldn't happen. Well, now you're seeing it here, and it's only even in December that we're starting to see this happen. The index fell to the lowest level since August 2021, as used car sales also declined 10% in November. And how this feeds back, I want you to be thinking in terms of the consumer price index. Look here, you see used cars and trucks. This is from the most recent CPI, and we know that we're going to get the November one here next week. But look, we can see that last month that used car prices contributed a positive 2.0% year over year. Now, can you imagine if Manheim's numbers start to feed back into the consumer price index for that, and it picks up, say, a minus 10% or a 12% or even a minus 8%, what that's going to mean to the broad CPI index? Well, it's going to likely happen, but perhaps not until sometime early next year. But we can already see today that the consumer price index is going to start taking a hit, and see that the Fed is tightening into a period where prices are declining. Another factor that's impacting the used car market are U.S. jobless claims, and I think this is what's going to make it even worse as they rise slightly in a tight labor market here, according to the Wall Street Journal. Initial jobless claims, a proxy for layoffs, rose by 4,000 to a seasonally adjusted 230,000 last week. And, realistically, 230,000 is still a pretty low number. I mean, it's ticking up ever so slightly higher over time, but broadly speaking, these numbers are low. And we expect these numbers to probably stay low until, we'll just say late December and going into next year, when we find out if employers really want to keep everyone around. What that has to do with the car market? Well, hang on. That was near the 2019 weekly average of around 218,000 when the labor market was also robust. Again, telling us from a labor side, things look good. But where it doesn't look good is continuing claims, which reflect the number of people seeking ongoing unemployment benefits rose to their highest level since late February, though they remain historically low. Continuing claims increased by 62,000 to 1.67 million in the week ending November 26. So what we're now starting to see, and we've been talking about this week after week, is people are getting on unemployment, and according to the Fed, who says there's 10 million plus jobs out there, well, they're not finding jobs. So I want you to now put this in perspective of the used car market. People went out during the pandemic and they bought cars because they wanted one. They didn't want to use public transportation. It made perfect sense. They wanted a vehicle. They had all the stimulus money. You had those one-time big checks. You had the monthly checks. It was fantastic. They were able to buy these big, expensive vehicles thinking, Well, of course, what the government told us was coming out of the pandemic, everyone's going to be booming and you're going to have no problem. Well, it turned out we were having a problem. So think about this. You go to work, you get a pink slip. You come home, you know food prices are spiraling out of control. You know rent prices are getting ridiculous. And now you've got to realize you've got to cut some expenses. And you start looking at your budget and say, you know what, I've got this car that according to the data says I'm now upside down on. And on top of that, well, I can't make the payment because my unemployment benefits aren't that good. So you start to think about the choices people are going to make here. And this is why I think this is going to get a lot worse, is they're going to step back and say, you know what, I'm not going to make the payment on that vehicle because it's not worth it. I'll just try to buy one later on. Maybe I have another vehicle I can use in the meantime, and I'll just come back in the market later on. And if more people get that attitude and say, hey, you know what, I'm just going to walk away. Remember, the great financial crisis was really a lot about how people walked away from paying on their mortgages. Carvana stock fell as much as 47% on Wednesday after Bloomberg reported its creditors have banded together to work with the company on debt restructuring. And so now we get into this weird company called Carvana, where you may remember built these awkward car vending machines that did the commercials where you're supposed to go and buy a car and have it spin around and come down. And that is just kind of unique. And those things are usually born in periods of excess financial monetary stimulus and the government stimulus. And so here we see that happening. And now this company is looking like it's about to fail. And so what did we see here? It says the company is working with creditors on debt restructuring. Now, what does that tell you? That means the big B word is coming. Yeah, that bankruptcy. Now, you think about this from Carvana or other car companies' perspective who are in the used car market, such as CarMax. What happens now if Carvana, because they can't save the company, the creditors say, hey, you know what? We're going to take a haircut anyways, so just dump all of that inventory, all of its assets on the market, liquidate the whole company out, and we'll just take what we get. Now think about that. All those companies that Carvana owns that are upside down flood the used car market, and now the whole thing comes spiraling down. And sure enough, bankruptcy worries swirl around the used car retailer, Carvana. An analyst with Wedbush Securities slashed his price target of the stock to $1, which may even be optimistic, saying the fact that its debt is trading at less than 50 cents on the dollar and a sign that there is a higher likelihood of debt restructuring that could leave the equity worthless in a bankruptcy scenario or highly diluted in the base case. The question is, are people going to restructure this debt on vehicles, on assets that are upside down and plummeting in value? That's the real question here. But again, the fear is if a company like Carvana fails and has to unload their inventory, what happens if other companies have to follow? Used car prices are going to come crashing down, and that's going to take consumer prices with it. Manheim, a unit of Cox Automotive, said sport utility vehicle prices fell a whopping 16.4% in November from a year earlier, the largest decline of any automotive segment. Used luxury car prices were down 15.6% as mid-sized cars were off 14.4%, and pickup trucks, which never seem to fall in value, dropped almost 12%. And so again, this is broad-based, and we're seeing, again, this after effect from the pandemic of all that stimulus hitting both fiscal and monetary, is car prices are crashing and nobody has the money to step in and say, hey, that's a really good deal. And I want that to be the key point here, is nobody stepping in on these vehicles is telling us that something is structurally wrong with the economy. And the only next step is what happens when people default on them. And then the banks, of course, remember what banks tend to hold car loans. A lot of small local community banks, credit unions, and things like that love holding car loans. Well, wait till they find out that they're going to become a used car lot. And one thing that should be helping car sales, well, that's gas prices. As gas prices fall below last year's average, which should be a boom for some of those big gas guzzlers where the prices are falling. The decline in gas prices bodes good news for customers whose wallets have been pinched this year by higher prices for nearly everything from milk to bread to eggs. Higher gas prices have been the biggest contributor to multi-decade highs in inflation, which have propelled the Fed to raise rates. So here we see kind of what everyone's been wanting is gas prices to fall, and notably it's having no effect on the used car market, and it should be. Again, we're starting to understand that what's going on in the global shipping and global freight and now used car prices, this is a big issue. It's not just some isolated aspect that, well, too many cars got sold, so we need to work through that. No, it's telling us there are serious issues with our economy right now. And as we look at gas prices on top of used car prices, what does that mean for inflation? Well, it's going to come crashing down. We've talked about how gas prices shown in red on a year-over-year rate of change are hovering at zero or are likely to go below zero, bringing the long-term inflation rate, because you can see the beautiful relationship between the two, down to the Fed's target of around 2%. This should bring it down easily to 2.5%. If you factor this on top of used car prices falling, just those two alone, we could actually see this hit the Fed target, not to mention where it could go further. But one thing that's working against the Fed, what we saw today, perhaps producer price index could keep them in play a little bit longer, although we won't know for sure until we get the CPI next week, which I'll predict is actually going to slow down, perhaps faster than most think. U.S. producer prices top estimates supporting Fed hikes into 2023 as the producer price index for final demand climbed 0.3% for a third month and was up 7.4% from a year earlier. Notably, on an annual basis, the measure continued to decelerate, and there's that key word. We know the trend in producer prices are slowing down. We see this across all the data points, slowing. Now, the question is, are we likely to see producer prices stay real high? Well, I don't think so. Excluding the volatile food and energy components, the so-called core PPI rose 0.4 in November and increased at an annual rate of 6.2%. And when we look at a chart, what we're seeing is several months in a row of 0.3% monthly increases. And if we go back in history here a little bit, you'll note that that's not really a big deal. The problem which drove producer prices higher, particularly on a year-over-year basis, is all this post-pandemic moves higher right here. As these work out, well, we could actually see a string of low numbers like 0.3% bring producer prices down. And one thing we know that feeds heavily into producer prices is crude oil. And here we can see crude oil in red on a year-over-year rate of change heading near zero, telling us that the direction for producer prices is actually lower. And so you start to factor all this going on here, and you have a Fed who's keyed to hike next week, I think the 13th, so next week, to 50 basis points, and he's talking about into next year, what we're likely to start seeing in January, February, March of next year is we're going to see used cars prices continue to tank. Gas prices start to have an impact on consumer prices. We're also likely to see producer prices continue lower. What we're seeing now, my friends, is a structural problem with our economy that says we did too much during the pandemic, and now we're about to pay the biggest price because it's all going to come spiraling down. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.